So I'm going to backtest Eurodollar for February 2024. These are the following rules. Nice and straight. Daily time frame, a buy side liquidity or sell side liquidity is taken. Displacement on the 60-minute time frame with fair value gaps. Displacement for me is just fair value gaps anyway. And then pull back into that displacement. And then entry on the 15 and the 5 minute. So let's go. So we are coming into this very strong sell side liquidity on the weekly time frame and also daily time frame after rejecting these highs on the daily and the weekly time frame. Price has been in a strong bearish order flow, has closed below almost all of these levels. Yesterday it closes below this, but doesn't take out the sell side liquidity. So right now I am alert. So on Monday we did tap that sell side liquidity and displaced bullish with this bullish fair value gap, which price taps into at 8 o'clock at night, which for me is a bit late to look for entries. And then it starts to displace. This is one of my entries, this inverse fair value gap, consolidation, sharp move down, hold off the fair value gap, and then entry would have been bullish. I'll put these there, and then target would have been at these highs, but I won't trade this because this is at almost 10 p.m. See how the price reacts. Price pushes up, right? So next day we have this fair value gap that price can potentially come down into, which on the lower time frame, let's have a look. It doesn't really hold, it doesn't really provide any entries. And now that we're here, I would want to see this sell side liquidity taken out. And I want to see price displace. So here we go, price displaces and leaves some fair value gaps. We have one here, and also one here. Ideally, because we've just closed above this level, we could potentially see price dropping into the middle, or at least this fair value gap. Let's look at daily time frame as well to see where we're at. So after yesterday's close, we have left this bearish fair value gap, which is a place that price will come to fill. Because the order flow has been bearish, and we've come into a quite strong sell side liquidity, especially with a daily time frame fair value gap below it. Price has put another bearish fair value gap. So order flow bearish, another fair value gap. Price could come into that level and continue lower or find some kind of resistance. So that's something to watch out for. So next day we have these fair value gaps. So yeah, like I said, we just closed above those highs. Price pulls back into the first fair value gap, closes below that, doesn't close, and then starts to push higher. Then again at 6 a.m. we hold that level, so we've cleared the second fair value gap. We've still got this fair value gap that price could potentially return to. Price continues higher, pulls back, might pull back there. Oh no, it rejected this 50% of that daily time frame. And then at 1 p.m. we rejected the highs of the fair value gap. And at 3 p.m. there's no major news, and at 3 p.m. we rejected the daily time fair value gap and have now tapped into this 60-minute fair value gap, which is also below these liquidity levels. So this is something key to remember. There's a lot of liquidity at below these equal lows. So we look for entry on the 5-minute, 15-minute time frame. Let's go on the 5-minute first. If we get a market structure shift, then I will be looking for an entry. Yep, we get a market structure shift right there, pull back to 61.8. At this level, I'll do it at this daily time frame fair value gap level. Stops below these low and targets. These highs are clear. We could also go up to that high. Ideally, I want to take it at that high. Even gives me 2.5 almost. Price taps into that level. Closes below. Doesn't close below. Closes below now. Right below that fair value gap, which is something to remember because that would make me panic normally in live trading. And then price continues higher. On the 15-minute as well, we probably get an entry. So you can see market structure shift and then pull back into the fair value gap, and then we continue higher. So where does price go up to? Where can price go up to here? We have this level right here. That's price can potentially go up to. Or maybe these highs, and then price tanked. All right, that's good to see. Where can price come down to? And then, so that's trade 1. Also, this sharp leg down after rejecting these equal highs and coming into the 60-minute fair value gap is essentially what price likes to do a lot of the times, is run into a point of interest with strong, bearish candles when the direction is bullish, and then provide an entry. This also happens at 3 p.m. So around 4 o'clock, you start seeing these moves, and if you had placed your entry, it would have been around at 4:55 and triggered at around 5 o'clock. Trade 2, we have this sell side liquidity, and we also have this. We also have this fair value gaps below this sell side liquidity, and it's CPI day, so price could run into this or run into that. But we wait for CPI to be released before making any decisions. All right, we've taken out liquidity at that low. What's going to happen? Do we get displacement? We get bullish displacement here. That's, that fair value gap is way too close to the highs. If you want to look for an entry at that level, you want to see some market structure shifts. Right, so 9 p.m. I won't be looking for a trade at that time. We've got displacement on the 240 time frame right there, which price taps into at first. A 1 hour time frame, no displacement. There you go, you get displacement. Price can come down to, we have rejected this fair value gap as well on the 60, so something to note. There we go, another displacement of bullish fair value gap, and now we look for entry. On the 240, we also have a drawn liquidity. These highs, I think, are good. It's a good level for drawn liquidity, but also remember the order flow is bearish. Right, we have been very bearish. We're close below this as well, but we picked up some bullish displacement after taking out the liquidity, and ran into daily time for fair value gap. So we've seen displacement, and now we have a fair value gap to play into. There you go. We have a swing low. The price has tapped. This is around 4 o'clock. Perfect timing. We got some displacement with some fair value gaps, and then entry. I would put it there at this low fair value gap, highs entry. Most likely won't hit the highs, but we'll aim. There we go. We got another trade for tomorrow, but so yeah, price ran up almost 3% before it came back down and pushed back up, and then tanked on Friday. And Friday we had PPI news, so ideally Friday morning I would want to take out some profit at this level, at this retest, and then see what happens after that. Just something to note, we had come into the 60-minute fair value gap, right? Very strong bearish fair value gap in a bearish order flow, but you also have to remember we took out this liquidity and price started to displace, and also closed above this fair value gap on the 240. So yeah, it's something to note. Unfortunately, trade number 2 ended up being a loss, although price ran up quite high. Trade number 3, we have, after rejecting these bearish fair value gaps on the 60, price can pull to this level, or at least to the next fair value gap, and find some support. Also, price had found support at this bullish fair value gap below this sell side liquidity, and closed above this bearish fair value gap, which provides an inverse fair value gap for price to pull back into. So that's a very good sign. And inside that daily time frame inverse fair value gap, we have a 240 fair value gap, and also a 1 hour fair value gaps here and here. We have PPI news coming out at 1:30, and also consumer sentiment coming out at 3 p.m. So this is something to consider. We wait until after the news, which is, this is 1 o'clock, 1:30. Price comes down into that fair value gap, inside this daily time frame inverse fair value gap, and if we look for entry around this level, there you have it. We get a market structure shift, and also a fair value gap, and a bullish fair value gap right here. This is just before 3 p.m. so then just before the news. We have market structure shift and also a fair value gap, so ideally we could just tap and push up, so I have to be careful. Oh, we don't get an entry. Well, that's a shame. The drawn liquidity was also clear on this right here, and also at these highs, which price eventually reaches. However, it reaches that before it taps the entry. This is why it's always important to note where it doesn't always pull back into the 618. especially when you have this order block and also this fair value gap after the market, in that pullback. So entry at that start of the fair value gap would have been a good entry regardless, with stops below there and targets at these highs. Could put stops below just for safety because of news and spreads, and still would have gone almost 2-to-1. And if you zoom out into a higher time frame, the drawn liquidity becomes even clearer at these highs, which I probably wouldn't take, but it's just something to note. On Monday, again, after this bullish displacement on the Friday, price consolidated and is now pulling back into this level right at the 60-minute fair value gap. And if price taps into that, that will be a good entry as well. Taps into it, market structure shift, fair value gaps, and that is a good reason to go entry. Targets at these highs, just put stops below. Cool. It's another good entry. Price pulls back down Tuesday evening, again taps into that level. It might come down more to clear it, but it doesn't, and then continues higher. More fair value gaps for price to pull into and provide entry next day to continue its bullish order flow. So price is coming into a buy side liquidity for trade number 4. Price can take out that liquidity and provide some bearish displacement for potential opportunities. However, we have come deep in discount. Price has rejected a sell side liquidity above a daily time frame fair value gap, which held, and we held a bullish inverse fair value gap. So it looks like tables are turning. Also, we've had this very nice bearish order flow, and whenever you see price come into a strong POI and do something like this, consolidate, and then a sharp close, which fails to follow through, and then closes up as a bullish, inverse fair value gap, then it's a sign of potential bullish momentum coming into the market. On the 240, above that buy side liquidity of that daily time frame, we have this strong bearish, order flow that's been maintained with this bearish imbalance. But also we have started to respect the bullish fair value gaps after rejecting a strong sell side liquidity. So something to consider. So let's see if we start getting some bearish order flow. So the day closed like this, above this high, and we didn't get an entry on the lower time frames. This also could be a market structure shift for a bullish run. We get a bearish fair value gap, which has come into a bullish fair value gap below this order block, this consolidation zone. We get a market structure shift followed by a bearish fair value gap right here, and if we were to take an entry short at these fair value gaps, then it would be down to these lows. Let's just put stops up there. We take out those highs. Let's look for entry again. I guess not. We close above that fair value gap before an entry is provided. We come up and take these equal highs. And honestly, for me, I should be looking for a bullish trade here because of the fact where we are. And you can see price starts to retap that fair value gap on the 16th time frame and then continue higher. Let's just see how that plays out. Eventually price comes up to these highs, takes out liquidity, and it continues higher. We also have FOMC news coming out at 7 p.m. And the trade is at 12 p.m. so not an ideal time to trade either. So in total in February there were 4 trades. Ideally I don't think I would take the 4th trade because of the location where it was at and the fact that we had such a strong bullish displacement and the fact that price came into a bullish fair value gap below an order block, which is an area where I normally look for a long anyway. So ideally I wouldn't take trade number 4, but still if we were to consider it, then there were 4 trades in total. P&L would have been 2.3% overall, excluding any commissions and swaps, so maybe like 2% in total. MFE, maximum favorable excursion, which is how long the trade ran for. So most of these ran for at least 2%. So ideally, even the loss I took, on my second trade, I could have taken profit at 2% and then be done. It ran up to 2.9%. So yeah, if I was to get out of a 2% with all of these trades, I would still be at 5% P&L, and if I wasn't taking trade number 4, then it would be 100% win rate. So anyway, yeah, it's 50-50 win rate, 50% win rate with a risk reward of, I guess, around 2%. So yeah, I got 2.3 P&L, and that's for February on 1 pair. So ideally 3 trades and around 3% return. So need to replicate that across multiple pairs because obviously I'm using the daily time frame for the sell side liquidity and buy side liquidity to be taken out. So obviously that takes a really long time to play out. Even with 3 trades on one pair in a month is fairly decent.